S&P 500 established some critical levels today. Nvidia, was there a subpoena by DOJ or wasn't there a subpoena by DOJ? U.S. steel deal spreads blows as Biden dashes takeover hopes. But is this a factual statement? It's a report from the the Washington Post rather, and Kirby says President believes American steel companies should remain American-owned, but he also says he's unable to confirm the report that Biden would block the steel deal. Dollar Tree's dumpster fire earnings. Is Bank of Japan going to raise interest rates again, and what we should be watching? We have a ton to go over. Let's get to it. All right, everybody, welcome back. So I did a little brief there so you can see what's going to be in tonight. There's going to be more than that. But there's a lot to cover, and I at least want to have a preview. If we take a look at the S&P and the ES right here, I'm going to start by dropping this to a 5-minute. It's going to become increasingly clear why we did this. And we can see that 10-minute or 10 a.m. bar marked rather. 10 a.m. was when the numbers came out, the JOLTS numbers came out. What I want to point out is over, under, and how these levels were affected all day. So whenever you have economic data, if you've been watching this for some time, you know to mark these levels. I think it's very telling that at the end of the day, you did the undercut, the sweep, and then by 4 o'clock, the rally back over. You tried to retest later, and you weren't even able to get there. I would watch these levels tomorrow. This was all based upon the JOLTS number. For time's sake, we'll just do JOLTS right here. 7.6 came in, 8.1. Okay, that's not the best, guys. So that's really very weak. And the market responded as if it was weak, and we saw the interest rate sensitive names rally. I can't stress this enough. This is where the puck is going, the interest rate sensitive names, and we're going to get into some of this. But first, I think we need to look at core levels on the ES. If we just take a step back and just drop us to an hourly and just zoom all the way out, let's move this down a little bit, and then maybe it'll work with me instead of against me. There we go. And we could see all our levels and how we're rejecting these areas, how we're stopping right in here. Even today, that 5-minute bar kept us in that range, didn't it? You have a long way down below, but you started to make a U-turn right in here, didn't we? Right around 3 o'clock in the morning, and we never got there to that 54.87 level, and we can see that we're hanging in there. If we drop this to a longer time frame and look at a 4-hour, it gets even more glaring, doesn't it? Let's clean this all off and just look at it. Does it look like we're out of the woods? Not really, no. It still looks like this bar is in control. We're always looking for control bars. And we did break there, and since then, and we got back into that area, you're not really able to get out of it, are you? And I think that that's very telling. But every time we're trying to rally, they're pulling us back in. So I think that both of these areas are very important, and they are areas that I would watch tomorrow. I do think it's worth noting that if we clean all this off, this was the second down day. Now, do you get a third one? You can, but usually you get some kind of relief the next day. Now, you have a ton of economic data coming out tomorrow, so I don't know the answer to that. But they did make life super easy for traders. All you'd have to do is just come here, put that little button right there, click right here, make yourself a little alert, and then just watch if that goes off tomorrow. And if it does, you broke the doji at 55.0675. Doesn't really get any cleaner than that as far as a trade. I think that's a pretty interesting area to look at. If we get into some of these others, like the NQ right now, you're seeing the same exact soup, just reheated, and it's the same exact level. If we drop this to the 5 and just drill out, you're going to see the same exact thing. What I found interesting about this is if we get to that 10 o'clock level and we mark off that bar and we mark off the bottom of that bar, you will note a difference here between the NQ right here and the ES during the same time. I never got to the low on the NQ. I got to the low on the ES. So that starts to beg the question a little bit here on what was moving, what's not moving, right? So then you take a look at the NQ, and then you would overlay the ES on top of that. And what I always do, what I like to do, is the relative performance. Now, if we clean off this drawing, let's clean off all the drawings for a second and just look at that and go, okay, well, let's get to that 9:30 time frame and just kind of see how the day went here at 9:30. And what do we notice? Okay, NASDAQ led today. Has the NASDAQ been leading? Is that something that's been happening? The answer is, if you could take a look at this, would be a resounding no. You know, the NASDAQ has not been leading since we started. They've been running in tandem. And then the ES has been leading. So you would call this a shift in perspective. There's really no other way to say that. And when you see these, you want to pay attention to it. Now, what you might want to do with something like this, even though it's not the same, is just throw in RSP and say, okay, where does RSP fit in this? And maybe to make this simpler is just drop this down to regular hours. And now what we would do with the regular hours is drop this to a 1 minute and then just see, are they still buying the RSP names? So we're going to go back to that 9:30 level and see. And the answer is, now remember, you're just on at the end of the day, the answer is even RSP was lower than that. I think that's telling. They're buying the NASDAQ. We might not want them to, but that's what they did today. And the RSP underperformed. So what we always want to do with this is go and then take a look at sectors. Now, for me, I divide it into 40 different sectors. And I always want to see, at the end of the day, we're just going to leave NQ in here. I just want to zoom out to a very specific time and price right around here. You'll see it change in a moment. And just go, okay, what exactly led today and what didn't? And you're going to get TAN, Block, the SOX, IGV. I have IGV in here twice. So what's moving? All the tech names. They were out of the 40, they were the biggest. That's what moved. Steel obviously came down because of that nightmare. And then we're going to go from there and just dive into it all. But what moved today? You don't see them buying the Utes today. Maybe they did, but they weren't. They were up on the day. You can see them right here. But what were they buying? They were buying tech. So if you're going to come into that tomorrow and say, well, you shouldn't be shocked that they're buying tech, right? Because that's what they were doing at the end of the day. Nobody thought that that's where this was going today, clearly. You know, you have that turnaround Tuesday mentality, but it's Wednesday. So when we look at this stuff, it does give us pause because we've been waiting to see what's going to happen. And we've been thinking that it's supposed to be the RSP. And I still think it is, but I think we got a little ahead of ourselves. So if we go here, and I'll show you what I mean by this, and I drop this down to an hourly, and I look at the RSI very quickly, well, here we are oversold. But let's just go to here and take a look at it and say, okay, when we get under this 30, what tends to happen? We get some kind of bounce. We might not like the bounce. It might not be the greatest bounce in the world, but we at least go sideways for a little bit of time once we cross back over, don't we? And again, it might not be very long. It only might be a couple hours before it sets back up again. And other times it sets up before it gets overbought and comes back down again. But usually down here, we get some kind of relief. Now, from July 15th on, we could take a look, but we'll go to that 11th date, which is when? That 11th is right around when we saw what? The first number that came out, that was the CPI negative month over month. And if we get under 30 and we lift, we're not getting that same kind of love that we've been getting, are we? Here we did get it when we got the washout. Are we going to get that here, that kind of love? I don't know, but it does seem like we've gotten ahead of ourselves a little bit. And now we're going to see how this plays out. Another thing that I really like to use in these situations, I find very helpful. I will go to a MACD, but really all I will use is the MACD histogram. And I just want to see specifically what's happening on an hourly basis. And I'm going to clean this off for a second. I'll show you exactly what I'm looking for, and you can do this yourself. It's extremely helpful at identifying places where you might have inflection. So you will see here on any of these bars that turn, once they turn colors, right? Flips back, flips again, and you mark it. They tend to mark bottom, and it might not mark a bottom for more than a day or two before it breaks again. But short term, it can give you a signal that you are near a bottom. It depends on how deep it is too. Obviously here, you can see it, and then all it did was stop going down. Now please listen to the words, stop going down. I did not say it goes up. I said it tends to stop going down, and you can see that here as well. Stop going down, did not crack here for 6 or 7 hours. And when you see that, that's what you're looking for, the stop going down. So when it doesn't go up, please don't go in the comments tomorrow and say it didn't go up. That's not what we're saying. What we're saying is it doesn't go down as much. Usually it doesn't go down for at least a couple hours after this happens, right? It's funny, I had one guy comment that said, you said the market was going to go up for 12 months on Saturday. I said it's going to be up a year from now based upon this economic data. And the data that I presented does not mean that you're going to go up on Tuesday because you wanted to buy out of the money calls, boomer. It doesn't work that way. All right, anyway, see how this is going? Here's the cues. You are before the open. Is that the doji? Is it going to hold? I don't have a clue. And here's the thing. No one else does either. You are below the 55. You need to be suspect. Here's the cues, and here's the relative to the SPY. Okay? And we always want to look at this. Cues relative to the SPY. But look what happened today. The cues outperformed. The cues outperformed. When the cues outperform like they did and they bottomed here, we did on the first day that this happens get a little love. Now, are we going to get that love down here? That I don't have an answer to. I can give you some signals that I use, and I can show you what I think. So the first thing that you're going to note is we got over 20 on the VIX, and then the VIX closed near the low of the day until the end of the day when it started to rally. And we have a level right here. And I would use that as our level, our demarcation line, and you were unable to break that. But you opened and then you sold down all day, which fits perfectly with what the NASDAQ did. And then you look at the VIX, and we can see that you popped over, and then we just sold down all day, right? Rally, 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 sell down. When did you sell down? Did you sell down at the beginning of the day? No, that's when retail moves, right? What did you do at the end of the day? We sold down. Okay, that means a reduction in what? Puts against the S&P. It's the only reason the VIX will move. All right, so then if we overlay that, we could say that, yeah, that gives us something. What would bust that? In other words, we never know what's going to happen, despite whatever people say. We really don't know. So what we're doing is we're managing risk. So you would put an alert here, for example, and you would say, if we made a higher high and this went higher, and why would this go higher? Because they're buying more puts. Therefore, if that triggers tomorrow and my little thing goes bloop and pops off, what am I going to do? I'm going to know that they're buying puts on the market and that we're probably going lower. Okay, that's what I'm going to know if that happens. The other thing that I use a lot is this. And this is the 3-month divided by the 1-month VIX. And what you will note here is the determination of bottoms based upon this. And really, I marked off where we are now. And where we are now is going to put you at levels that you were at the end of March, where you were October 3rd in that area, right, to November 1st in that area. It's going to put over that April 26th date. So if you remember any of these dates, which I'll show you on a calendar in a moment, that's where you are today, okay? And then, of course, you have the big dog, which is down here. And if we drop that right there, and you might measure that coming straight across, let's take this off so we can stop that little magnet from playing with me. And we look at these levels, what do we see? Okay, here's the 18th, here's the pandemic, and here's that bottom. Now, if we go through this, and I watch this on a weekly, and we mark off that level, and we see that flush here, we know that that flush takes us to the great financial crisis. We know we had this wonky thing here, 18, and we also know we had the pandemic. That's how fast it happened. That's how fast this was. People, I don't think, get. Why is this important? These are all marked bottoms, guys. And it doesn't mean that it's the bottom. So when it doesn't go up tomorrow, please, and I know you're going to do it just to torment me, why didn't we go up? But understand where you are, and that helps you define a plan. Now, what else I would take into account are a couple things that I thought were very interesting today. Let's start with semiconductors, okay? And let's just start here with the SOC. This could have easily fallen apart. Absolutely easily. You don't have much going for you. Matter of fact, if we take from the peak VWAP over and we drop an anchored VWAP, you will see a couple things. You've broken point of control, that's your valuation high, and you've broken your low and you're unable to get above it. And that's not really a great sign that you're below that. You're supposed to be above it. But this is where you are from that peak. All right, that's pretty interesting, right? Now let's take a look at all the volume measured out from January 1st and take a look at where you're at. Now this is where it gets super interesting to me. So here's my point of control, and that's where you are. This is your value high, there's your low. Look at where you sat today, and you didn't break. I think that's very interesting that year to date you held there. And I think that that's an area that you might want to look at. So if I was you and I was a trader, what you might find helpful is watching the low of that area tomorrow and see if you're going to break it or not, which is 210.50. If not, and we flip, that might be an area to pay attention to. Now, could we have some kind of driver tomorrow that gets us back up to this point of control? I don't know what that driver is going to be because you have non-farm payrolls. I will say this. I find what's going on here fascinating because you have two articles out. One yesterday that says they got a subpoena, and then the company coming out and saying, we didn't get a subpoena. So we're not really sure what this is. So is that just lawyer speak? Is that an issue? I'm not sure. What I tend to do with these is I tend to take the peaks, and I want to see where we are on the peak valuations and our inability to get over that peak. That's the first thing. Then I'll always look at the anchored VWAP on the day and just say, okay, where are they after hours, after the snooze? And the average person wants out. But these would be areas that I would probably pay attention to tomorrow and see how we react to them. I find that very interesting, and I would watch this tomorrow. Could that be a catalyst? Maybe if these guys come out tomorrow and say, hey, by the way, this is what Nvidia is saying about this, and this is where they stand with it. It could be lawyer speak, like we didn't get it, but our vendors did. You never know. I'm not going to go down that rabbit hole, but understand that could be the issue here. And I do think that's important. I want to stress that could be the catalyst. The other thing that I thought was very good today was what happened here with Apple. So Apple, we had all of retail sell down here, as I like to say after watching Deadwood, the Hoopleheads. So we watched all of retail blow out here. If you don't know that, you need to watch Deadwood. It's literally probably the second best show, HBO, after The Wire. So if you watch that, you definitely want to watch Deadwood. If you watch this level right here, what'd you do after the first hour? Who sells the first hour? Retail. Okay. Tries to rally, comes back to a level, pulls back all day long. You are always judging relative performance. That's your job. Your job is to find out where the money's going. Remember, they are the sharks, you are the remora. So you overlay the SPY, you overlay the Q, you drop this down again into regular trading. And what do you see? Let's go to a 1-minute chart. Okay. What happened today? As my niece says, what happened? And then you go back and you take a look at this, and then you can see, let me just drop this to here so you can see it, and you will see all day long, Apple's going up, these are going down. Okay, now, it doesn't matter if they catch up. I don't care. But when these are dropping, okay, and Apple's going up and they're dropping, that's telling you that Apple's being accumulated. And you have that September 9th date coming up, don't you? So that's kind of important and something that I thought was really interesting. People trying to get ahead of that. And they're doing it at a key location. It's kind of a crazy day to do it if you think you're going to get a better, area. But people are going to say, but that's a hanging man. Maybe. Or maybe they're going to flip it and maybe it's going to become a morning star. You don't know what that's going to be until it is, and then someone's going to point at it later and say it's this, right? All you can play is the hand that you're dealt. You held today, you come in tomorrow, and you fight the day, and you go from there. No one ever knows what's going to happen. I find that very interesting that you held there. IGV. If you look at this, you got right and you held the 22. You weren't able to get through the 55. But from that open, you had buying all day. So we do have buyers out there. Now, a lot of this news that came out today, I do want to address. So, for example, we're watching after hours, we're watching X getting bought. And I want to just hammer this point home, and you go back to the first slide. I put all the slides together to save some time. There's a statement in the Washington Post that I find very timely that this deal's not going to get done because Biden's going to block it. Biden had year to block this thing, okay? Year from back here. And we can all talk about whatever we want to because now it's a political football. What anyone is going to tell you is that they could be positioning. How? They could be positioning to get a better deal with the union for the union worker. Okay? That could be what they're doing. They could be posturing. They could be trying to take something away from their adversary that's running against them. I don't know why they decided to do it 60 days before an election or whatever, how many days we are out from an election, but that's what they chose to do today. The idea and what you saw was that Kirby came out and said, I don't know, I can't confirm that that's what he's going to do. So in other words, this didn't come directly from him, and it acted like it did. And I want to just be very honest about this whole thing. If this happens, he made it very clear. This guy, the CEO, made it very clear, like, we're going to shut down. We're leaving Pittsburgh. We're shutting down plants. This needs to get done. Who's going to capitalize us? This needs to develop not only for U.S. Steel, but also for M&A activity, or M&A activity for the next 60 days is going to be non-existent. And that's going to hurt a lot of these companies going forward, especially the M&A company. But just so we're on the same page, this is where we were when the stock was put up for sale, before they got the offer. So you are $10 off. Now, is the question, the stock never should have been here and it should be here because no one's going to be able to buy them. The question is, who could buy them? If you're not going to let a U.S. company buy them, who can buy them? Are they going to bail that out? I don't think they're going to bail them out. Certainly not in an election year. They're just not going to do that. So then that begs the question, what happens? I think you're going to get some questions, and I think you're going to get some clarification on what he meant there, depending upon the workers and the bills and things like that. I would watch this level 30 very carefully tomorrow. It's certainly a level that we're going to be watching. At this time, just FYI, just disclosure, I do have a position in that name at this time. But as always, I can move. But I think it's pretty fascinating what's going on there. And I wouldn't be surprised to see some kind of clarification from the CEO tomorrow and from the administration to clarify exactly what the heck is going on. Because if they do this into the election and the CEO comes out and says, we're getting rid of those jobs, we're leaving Pittsburgh, well, then the incumbent is going to have a problem with Pennsylvania. I'm not getting into the politics. I'm telling you from a stock perspective, the idea of him forcing their hand to leave Pennsylvania in a swing state to lose U.S. Steel is probably not ideal for them to do that. So I would watch this very carefully, and I would watch how the news comes out. This kind of stuff can move the market. But overall, I felt today was pretty constructive. Now, Dollar Tree, I will walk through this trade later. This was a trade that we did. We did buy the puts into this earnings call. I will do that sometimes if it's glaringly obvious. This one was obvious because of what happened with Dollar General, and they basically share the same brain. If you ever looked at these two charts together, it's really simple. I actually showed this yesterday. If you're in the community, you already saw that. If you're on the wait list, another letter will go out either tonight for the next 24 hours or tomorrow, and then the community is shutting down. But if you are on the wait list, I will make sure that you get an invite. So please get on the wait list. If it doesn't go out tonight, it will go out tomorrow. I'll make sure of it, and we'll go from there. But here's Dollar Tree, and here's Dollar General. They share the same brand. I mean, it's pretty obvious, right? Same exact company, same soup, reheated, just different name. One's Manhattan clam chowder, the other one is New England. And you can see how that's playing out here, right? You see the breaks? Okay. So this gave us the confidence to do it. We paid three for them. Hold on, let me take a look at this and see what we paid for these. We paid $3.14 for them, and I'll show you how we just walked them down. But once you saw this and what happened here, this became pretty clear. Actually, there was even somebody, I read a couple reports and completely forgot about it, to be candid. And then someone in the community is actually in that space, and they started talking about it. And the more I looked into it, it just seemed like it was a no-brainer. Candidly, it was. With something like this, though, what you're looking for is you're just looking for your entry. Obviously, this is the day after, but all we were doing is just watching and watching and watching. And it presented itself right here as well, just before. I'll show you. See this level right here is the 29th. Here's September. And then you're just watching this thing and trying to rally, and then it just fails. And you're really just seeing if you could even make the higher high, which you couldn't even do, right? Because if you could make the higher high of the previous day, then you might get out of the way. But you can see the reversal pattern right here on it, where you get the two wicks. You could say tweezer top, or I'm just going to say bearish engulfing. But that's a place of interest, isn't it? Isn't that interesting? Was to me. And you can see the pattern over and over again. Pattern recognition, right? Pretty deadly, isn't it? And then at the end of the day, it just started to sell down because people wanted to be short, because it was glaringly obvious, as somebody likes to say. But then the question becomes, what do you do with it today? I can drop, hold on a second, I'll drop these in. But what we're doing with this, like here's the buy. And what you're doing with any of these trades is you're setting them up before you even get in them. So this is something, when I was doing an onboarding call, somebody said something today, like, how do you hold this stuff? Like, how do you stay in the trade? You have to size appropriately. And I think that's where people make the biggest mistakes, that they're not sizing appropriately. And when they do that, it just puts them in an awkward position like here. So what you can do, once you've sized appropriately, like I even hedged this at pre-market and then I closed the hedge. But you can see we're getting out, we're up like 500%. Some of the other things that didn't work or did work, whatever. But on the way down, we're just scaling out. And I'm just literally moving the stop down and down and down. So you get to right around here, this 945, 950. And I'm not going to want to be in there after I'm up like that. So what I'm doing there, you can just see I'm trimming. And then I think it was right around that level. Let's see if I can find another one of these and just show you where I'm just literally at that point just saying, you know what, that's enough. And what you do is you're just getting out of the rest of the trade. And you can see that right here. Because once you start ticking up, I don't know it's going to do this, right? I don't have a crystal ball like other people. I have to just use stock patterns to see what's going on. And what I would say about this is, if the economy is going to be this weak, then that's fine. Then we're going to have to play the hand that we're dealt, right? We're going to clean all that off. But what I would say is that these moves are going to give us short-term opportunities to trade tech. I'm not saying they're long-term opportunities, but I think there are short-term opportunities here. And I wouldn't sleep on trading them, but at the same time, I really want to hammer this point home. If it's not broke, don't fix it. I've been talking about these names since November, and everyone's like, oh, he does day trading. I should use like the voice that I make you guys sound like, oh, he does day trading. But like when you start to see these, when we got a new guy there and we started talking about Argentina and how the sovereign bonds were going to affect the market, right? What you're starting to see here is all these things are working. They're just working. And people are like, well, what do I do with them? I can't buy them now. I mean, what if you said you couldn't buy Apple 5 years ago, right? Like, I'm not telling you where to get involved in these, but like, where are you going to get involved in these, right? Like, when are you going to start looking at these interest rate trades that are just ripping people's faces off? At some time, you're going to have to start learning fundamental analysis. I can't explain it any clearer. You're just looking at a chart and thinking that's going to be all the answers. That's not how this works. And when you understand that, you can put these pieces together. You can find what the guys refer to as slappers. That's it.